Good afternoon. Here are the closing market comments for Tuesday, December 14th. Corn and beans gave back a little bit today after yesterday's very strong gains, and the wheat market seeing some significant losses, kind of running out of bullish news in the wheat market, allowing that market to see some significant technical selling. March corn finished a penny and a quarter lower at $5.87 and a quarter. July corn down 2 cents at $5.99. January soybeans down 6.5 at $12.96. And July soybeans down 6.5 at $13.11 and 3/4. Kansas City March wheat down 20 and a quarter at $8.15, and Minneapolis March wheat down 27.5, finishing at $8.43 and a half. Outside markets were mixed and relatively quiet today. Crude oil currently down 33 cents a barrel at $88.28. The gold market off about a buck at $13.96. The U.S. dollar index is up 11 points, currently trading at 79.72, and the stock market seeing some moderate gains with the Dow up 70 points, trading at 11,498. Livestock markets were a little bit lower today. February cattle off 42 cents at 104.52, while the February hogs down 20 cents, finishing at 76.12. In the corn market today, we saw that corn prices did give back just a fraction of yesterday's large gains. Exports over the last 6 to 8 weeks have slowed, but corn demand from the ethanol industry is record large, and the increased use for ethanol is likely larger than any possible reduction in the exports. The corn supply and demand is very tight. Any reduction in overall supplies or increase in any demand for U.S. corn could pull ending stocks below what is considered to be minimum pipeline levels. If we would see any additional reductions in the ending stocks from USDA's current estimate of 832 million bushels, it would likely result in prices moving higher in order to ration demand. In soybeans, Chinese crush margins have slipped lower and in some cases may be negative. Some traders in the marketplace believe that China may slow down their purchases and actually may request that some shipments be delayed. But this is just talk at this time, but sometimes talk can move markets, at least in the short run. South American weather is a mixed bag. Very good moisture is being reported for almost all of Brazil, while Argentina continues to receive below normal rainfall in many locations. They've received just enough rain to avoid a significant crop scare. Oil World lowered their Argentine bean estimate to 50.5 million metric tons, citing ongoing dryness in Argentina, while USDA's current estimate is at 52.0 million metric tons. And Oil World's Brazilian estimate came in at 67.3 compared to USDA currently estimating 67.5. In the wheat market, technical selling and a drier forecast for eastern Australia pressured wheat prices almost all day today. U.S. milling wheat is one of the cheapest on the world market right now, but the $1.50 rally over the last 3 weeks is likely causing some buyers to hold off and wait for a possible correction. World weather concerns should provide support on any significant price breaks over the next week or so. I pulled out a weekly palm oil chart to give us an idea of the strength in this palm oil market here just since July. Prices rallying sharply and now up there challenging the highs from back in 2008. This is just one item that's been very supportive to the soybean oil market. Another chart that's worth taking a look at is the Paris milling wheat chart. And again, we can see that Paris milling wheat surged to new highs here over the last week or so. We also note that today Paris milling wheat futures were hit quite hard, and again, U.S. wheat prices were down about 20 cents. So it's, again, very important to note what's going on in some of the other world markets because the U.S. grains definitely do not operate in a vacuum, and prices in other world commodities can have a very significant effect on U.S. prices. Now turning back to our U.S. charts and taking a look at the March corn chart. Corn today, somewhat of a consolidating day, giving back just a very small part of yesterday's gains. The overall chart, short term, still looks very good. It's turned upward over the last 3 weeks, and the long-term chart also still pointed upward. We do want to be just a little bit aware of the fact that technical indicators are getting overbought, and so we could see some corrections from time to time. But again, both the short-term and the long-term charts do look very favorable for corn. Turning to our January soybean chart, today's price action kind of a mixed bag. We did post post a new high for the move up at 311 early this morning, but prices did turn around and close a little bit lower, so somewhat of a disappointing close. But it's done nothing to change the overall chart. The overall short-term trend is still up. We're still trading above all the major moving averages. In fact, the first level of significant support would be down around that 1255 type area where we've got the 20 and 40-day moving averages. That would be seen as support level if we got a little bit of bearish news. And then we have major support down towards the $12 level. Looking overhead to the next level of resistance, the contract highs posted at 348 back in early November would be the next target. If we can get some bullish news to come into this marketplace, that's very likely the target that many traders are going to be looking for here over the next few weeks on any piece of bullish news. Turning to the Kansas City wheat chart, as we mentioned yesterday, wheat looks like it's trying to turn lower, at least in the short term here, on both a chart standpoint and a technical standpoint. Today's price action being about 20 cents lower in the March wheat, very disappointing for the bulls, and does indicate that this market may be interested in pushing back towards the support level down around the $8 level. We've mentioned that here for the last week, that would be a potential setback after the major rally that we've had. I'm not significantly bearish right now, but I think we have to respect the charts, at least for the next few days, in that the charts are indicating that we could see some additional corrective action to the downside over the next few days or even a week or so. That'll wrap up this afternoon's broadcast. Have a good afternoon, and thanks for joining us.